Welcome to our weekly Forex forecast, and this is for trading from May 6th to the 10th, 2019. Before we get started, let's look at a quick disclaimer here. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. Okay, so coming up today, we have some Chinese data coming out, PMI numbers. So the Chinese data is important for New Zealand and Australia because they are big trade partners with China. So if the data comes out good, then in that case, it would be, we could see corresponding rise in New Zealand dollar and Australian dollar. Tomorrow, though, we have bank holiday in UK. We do have PMI numbers coming out of the Eurozone, so these will be important, even though they are not marked in red there. We have Bank of Canada, Governor Pulloff speaking. So Bank of Canada has, so they've kind of been changing their stance on the monetary policy. They were doing interest rate hikes and now they have stopped. So any comments coming out of Bank of Canada will be important in regards to expectations around interest rates for Canada. So this will be important and could have an impact on Canadian dollar or dollar CAD there. Australia, here we have retail sales for Australia. Now, one of the things that a lot of people have been saying is that in this upcoming RBA rate statement here, Reserve Bank of Australia may cut rates. And as we can see, so I'm going to tie these two together here. As we can see here, the expectation of the forecast is for a rate cut. Now, this one, the data has been coming out a little bit lower than or worse than expected for Australia, and hence the market is expecting an interest rate cut. So with this one, if the retail sales number come out negative, it will put more negative pressure on Australian dollar, because then the expectation here for an interest rate cut will go up. So therefore, the retail sales numbers here could have a negative impact on Australian dollar if they do come out negative. So keep that in mind. And then we have inflation expectations for New Zealand here. Now, New Zealand as well, the data hasn't been too good. Now, there has been some data that was positive. I think the trade balance numbers were positive for New Zealand. They came in better than expected. But even New Zealand, we are seeing that the data has not been as good as they would like to see. As a result of that, there is more pressure on the central bank to do some sort of expansionary monetary policy, and there may be more leaning towards an interest rate cut, especially if Australia does an interest rate cut. So New Zealand could follow as well. So keep that in mind. If the data continues to come out negative, it will have a negative impact on New Zealand dollar. So this inflation number is very important for central banks. So this is a key indicator that they track. So if this is negative, it could have a negative impact on New Zealand. So if you look at the previous numbers, they've been stable. So now if they drop, I would expect New Zealand dollar to go down. And then we have this RBA rate statement here. And as we can see, market is currently pricing in an interest rate cut. So should the interest rate be cut, it will be negative for Australian dollar and across the board for Australian crosses. However, because everybody's expecting an interest rate cut, the downside is that, or the point that we need to be cautious about is, so if everybody's leaning in one direction and they don't cut interest rate, in that case, it could have the opposite impact. So if they don't cut interest rate, Australian dollar could actually go up because we have too many people leaning towards an interest rate cut. So do keep that in mind if you're positioning in a certain way going into the interest rate decision. So just watch out your position size, because should they not cut it, it could have a disproportionate positive impact on Australian dollar. And of course, the commentary here in the statement will make a difference as well, how they position it. So if they don't cut the rates, but they say that if we are going to continue watching the numbers and will be ready to cut rates further down the road, that will also be seen as negative. But just be careful with this one. All right, and then going into Tuesday here, we have New Zealand. Reserve Bank of New Zealand as well. Right now, as we can see, market is not positioning for an interest rate cut because, like I said, Australian dollar data has been more negative than New Zealand. And as a result, we're not looking for an interest rate cut. However, the commentary here will make a difference, especially if Australia cuts rate. Australia and New Zealand are basically their sister countries, so they do tend to kind of follow each other, just like US and Canada do. So US starts to raise rates, Bank of Canada does the same, and once they stop, Bank of Canada tends to sort of, they're linked anyway. So same with Australia and New Zealand here as well. So it could have Australia cutting rate could increase the expectations for New Zealand cutting rates, but right now we're not expecting that. So in this one, the important thing will be the comments from a Reserve Bank of New Zealand. So if their comments are more leaning towards economy slowing down, or they're concerned about the trade relations and stuff like that, that could be considered negative. So if their economic forecast is negative, or they start making comments about expansionary monetary policy, all of that can be seen as negative. So we have to pay attention to what they say in the rate statement as well as in the press conference. So press conference is an hour after the actual official interest rate here release. And usually we see, first we see a response from the interest rate statement, and then there's second response from the press conference. So just keep that in mind. And then of course we have ECB here, even though this is not marked as red. ECB has been more dovish than they have been before. So first last year they had said that they were going to look at raising rates in summer of 2019. They have recently changed their stance, and they said that they're not looking to raise rates this year. And as a result of that, we saw euro drop. Now, if the comments in the monetary policy meeting minutes here lean more towards that, it could be seen negative. However, if they change any of the language around that and don't mention anything about it, that could be seen as positive for euro. And then we have FOMC members speaking here. On Friday, we saw that US dollar really took a hit because a whole bunch of FOMC members came out and they started talking about interest rate cuts. Now, we did not see that from Powell in the rate statement, but what can happen is when we start to see so many FOMC members or central bankers talking about interest rate cuts, it's like there is trouble in the waters, right? So even though the Fed is not cutting rates right now, but if they're all talking about it, that means it kind of shows us how they are leaning and where they may vote coming up. So as a result of that, we see that when FOMC members are speaking, it can have an impact on the US dollar. So if Brainard here also says what previously was said on Friday, that they're calling for interest rate cuts, that would be negative for the US dollar. And on Thursday, we have Canadian trade balance numbers. So this will have a direct impact on Canadian dollar. And we have Fed Chair Powell speaking. Now that we have heard a lot of FOMC members on Friday and this week here as well coming up, Fed Chair Powell's speech will become very important. So if he talks about direction of the monetary policy for the Fed, that will have consequences for the US dollar. So this is an important one to pay attention to. And we also have PPI numbers, which are leading indicators, just like the PMI numbers for retail sales and GDP. So these numbers will be important for the US as well. And then we have RBA monetary policy statement. Again, here, so usually I found that the first time they make the statement, it has a higher impact than the second time, but do expect some sort of a response from here as well for Australian dollar. And then we have GDP numbers as well as manufacturing production numbers for UK. Again, if the numbers come out negative, it could have a negative impact on the British pound. The pound now did get some good news or it gained positive sentiment last week. I think it was on Friday because of the comments that came out in regards to a second referendum. Anytime there's a talk of second referendum, that is positive for the British pound. And that's why we have seen this big move in British pound based on just a sentiment move based on second referendum talks. So if that sort of talks or those if those type of comments continue to come out this week as well, it will be positive for British pound. And some of these numbers may just have a quick impact and then market may go back towards the sentiment driven move. Something to keep in mind as you're trading. And then of course we have employment numbers for Canada. These tend to have a direct impact on Canadian dollars. So we need to keep that in mind. And very important numbers here for the US, CPI numbers. Now we have been hearing Fed members speak and they have expressed concerns about inflation. So if inflation is not going up the way they want it to, it could then have a negative impact on the US dollar because that creates sentiment or expectation that Fed will either cut rates or they'll go back towards expansionary monetary policy. So again, a ton of data this week that will have an impact on the different currencies. So as you're trading, do keep that in mind. And perhaps we want to look at pairs that don't have news coming up that day. So that's for our news. That was, looks like a busy week coming up. Now, let's take a look at our charts here. And as usual, we'll start off with euro dollar here. So with the euro dollar, what we see is this basically downward move. However, on Friday, we saw that prices pushed up. The data, the comments from Fed for our FOMC members were not very good. And as a result, US dollar lost ground. We saw euro dollar push, we saw everything push up against the US dollar as a result of that. So now we are back into this area. It did not go down. So this is where we are. So price dropped, and this week we saw that it has pushed up, and it was going down, but then we have another bullish move here on Friday. So as a result of that, our weekly here, weekly candle is neutral here. So we see that it hasn't really done a whole lot. Now, how do we position ourselves with this one then? Now here, so there is bullishness in this candle, which means it could go higher. So there are a couple of things I would keep in mind. One is if the price were to go retest the high here at 1.1260 and then stays below that number, then it could drop. However, because there is bullishness in this candle, what could also happen is that price goes through it. In that case, I will look for it to go towards the high of 1.1320 level, because that's the range that price has been trading in. So for the last several weeks here, this is where price has been stuck. So it did try to go through. So it broke below the support, but as we can see, it's right into that very strong support. We had talked about this last week. It's into a very strong support. It sat here for several weeks, which means that it could sit here for that period of time as well. So from here, basically, we could see price go all the way up into 1320. And if it stays below, then we are looking for price to go back into the range. So this seems like price could go back into the range. So that's what I would look for. Now, should data be coming out negative for the US dollar, we can see price go all the way up to the very, very high at 1.1450 level. So do keep that in mind, because we have CPI numbers for US. So if they come out negative, we could see it go all the way to the top here, which is our next level of support resistance. So right now, I would say it does have slight bullish bias to it. My first target would be at 1260, so 1.1260. If it doesn't break that level, I would look for it to come back towards this support here. And then it could do one of these and become range bound here. However, if we start to see here negative comments from Fed and all that, then it could go to the next level here at 1.1320 and respond here. However, if the negative data continues or negative comment, CPI data comes out negative, I will be looking for price to go all the way into 1.1450 level. So that's where we are with the euro. Next, let's take a look at British pound. Big, huge move in the pound here. And this was the result of the positive comments in regards to Brexit here about doing second referendum. That has created this big move to the upside. So right now, British pound has positive sentiment driving it. Now, excuse me, with positive sentiment, sometimes we could get a move like this where we have a big push to the upside and then it kind of trickles back down. But the talk about second referendum really is positive, and I think we could see it go all the way up to this level here. So as we can see, pound has also been trading in this range, and with this bullish candle, it could go all the way up there. So I would say bias is bullish. If it does break through this high, so this is a strong level of support resistance right at 1.3220. If it breaks through that level, it is highly likely that it goes higher into 1.3400, which is the top of this range. And this is where it's been trading for a while now. So it's rejected the low. Now we're looking for it to go towards the high. So bias is bullish here for pound dollar. Aussie dollar here, this one is looking neutral at this point. We did see a nice drop here. Price went into the support and then has pulled back. So with this one here, bias is neutral here, neutral to bearish. Now, there is a leaning towards bearishness because of the upcoming RBA statement. So I would say bias is still bearish on this one, but the weekly candle is indecision candle here. So this is what I will look out for. Price to go, if the price goes through the bottom here, through the support, then I will look for a continuation. However, because the US dollar is weak at the moment, it could go up higher. So if it breaks the high here, it could go all the way up to this 0.7150 level. And it won't be as a result of bullishness in Aussie, but more weakness in the US dollar that is likely to push up. And that's why the bias is neutral to bearish here, because candle is neutral and it's because of the US dollar. And as a result, it could go higher. So if it breaks through here, I will look for that move, and then it could also go all the way into 0.7200, because there is, as we can see, it will also be back into the range. So price has just been stuck here for several weeks, and it could go all the way to the high. So right now, bearish to neutral for Aussie. And then New Zealand dollar, same thing here. It's a neutral candle for this week. Last week, price came into the support, pushed back up. Our bias was slightly to the downside here, and it dropped, but now it has closed as a spinning top. So this is neutral as well. So same thing here. If price goes towards, if we see the data coming out negative, then chances are price will drop. But if it does not go below the support, it could just become range bound right here. Now, if the US dollar data continues to be negative, this could go all the way into this next level here at 0.6780. But either way, we'll have to be careful because there is a rate statement coming up for this as well. So right now, this is also bearish to neutral, but this one I expect it to be more range bound this week than Australian dollar here till the rate statement comes out. Dollar CAD here, this one has steadily been moving up. So right now, as we saw here, price tried to break through, it's pulled back, and this is where it's sitting now. The interesting thing about this one is, well, one, it's a neutral candle as well. So the commodities are neutral this week, or commodity currencies are neutral this week. But see how it's holding above this previous resistance level that has now acted as support. And if you look all the way to the back here, this is a strong support and resistance level where price has reacted several times. So with this one here, bias is neutral, but if it goes down into 1.3370 level, but does not break, in that case, it could go all the way first to test this support resistance level, and it could also go higher. But like I said, US dollar has not been that strong. On Friday, things kind of turned around. So in this case, if it goes up and does not break through, it can turn around and come back down and come back all the way into the bottom of this range. So currently this is range bound, but it is holding in the top part of the range, which means it could go higher. But if it does not break this resistance, it could drop as well. So overall, bias is neutral for dollar CAD as well, but those are some of the things I would keep in mind this week for dollar CAD. Euro pound here, this one, very strong bearish move here to the downside, especially with British pound, strong sentiment for British pound. So this is looking bearish, but we are right into the support. And as we can see, price was very bearish here, but then went back up. So we have to be mindful of that because this is the bottom of our range again, and price is testing the bottom of the range. However, if the positive sentiment continues for British pound, I would expect this one to drop further. So the bias for euro pound for this week is bearish. And in terms of the pullback, we could either see a pullback into 0.8535 level or higher into 0.8580 level. So do watch out for that. But bias is bearish for euro pound. And if it breaks the support, then the target is 0.8380. All right, Euro Swiss here. Euro Swiss, last week we had a bearish pin bar, but price did not break the support level. And it just kind of went up and did this. So this move here looks very similar to this move, right? This is exactly, except for this bullish candle, but we have a bearish candle and then another pin here. We have in this case, we have a pin bar and then second pin. So this is, bias is to the downside. However, be mindful that this could become a range bound move like this. So that's something I would be careful about. Same thing here. We saw that price just went sideways for a while before it dropped. So bias is bearish, but be mindful of the sideways move. So for bearishness to continue, we need to see a break below the support level, and only then can we get a continuation to the downside. So the target here would be 1.1250 level. But I would just be careful with the support. If it doesn't break the support, look for price to kind of go sideways right here, just like this move that we saw here. So that's our Euro Swiss franc bearish bias. Pound Swiss franc looking very bullish here. Last week we had this doji. Now we have seen price move back towards the support resistance level here. So this looks quite bullish. Bias is to the upside. Be mindful of the resistance, because if it doesn't break the resistance, it could drop. But for now, I would look for a bullish move out of this one. So pound Swiss franc looking bullish, but caution would be that it just goes right here and then kind of goes sideways. So bullish bias for this. Dollar Swiss franc here, this one is neutral as well. It is holding above the support resistance level. So it still has that bullishness in it, but neutral weekly candle this week. So with this one, if it goes to test the support here, doesn't break through, then we could get this type of a move. So for now, this is neutral. Pound yen has been trading in this range for a while. This week we have a strong bullish candle, bullish engulfing here, mainly because of Friday's move in British pound, but this is looking bullish. We are moving towards the top of the range here. So this is where, or top of the smaller range within the larger range. So this is where price could go to, and it could react at this level, but we are in this larger range. So I will look for price to move higher. So the first test will be to see if it can break the high, but then I will look for price to move higher to the top of the range here. So bias is bullish, and then this is the type of move I'm looking for, because in the last, for it to go further towards the top of the range. So bullish there. Euro yen, this one's been slightly different because euro hasn't been as strong. So this one we have a pin bar here, which means price could drop further. So bias is to the downside. Now, one thing to keep in mind though, we are coming right into support there. So if it doesn't break 123.80, then it could turn around just from here, because as we can see here, this is also a range-bound move, and price has been trading in this range. We had a very strong bearish candle here, but then as we can see, it could not break this support and turned around. So this support is a very strong support coming all the way from here. So it was resistance, which became support, and now it is acting as support again. So in this case, the first thing to be cautious about would be, so bias is bearish for this one, but if it does not break the support at 123.80, this is the move we can expect. So I will look for price to turn around if it does not break the support and go back into the range. It could also go all the way into the high of the range at 126.80, depending on how strong it gets. So this one I would say is bearish, but if it does break that level, then I will look for it to go into the next level here, because this is where price became range bound for a period of time. So in this case, I would look for price to then, if it breaks through, price is likely to go to 122.20. So bearish bias for now for euro yen. Okay, next one, dollar yen. Dollar yen is looking bearish. Last week it was bearish. This week is also bearish. So I will look for price to drop further. Next target would be 110.50 and then 109.60. So looking for it to come back down towards the bottom of the range. As we can see, this has also been range bound for a period of time. So I would just look for price to continue back down towards the bottom of the range here. So bearish bias here for dollar yen. Aussie yen, this one is also bearish. We are getting close to the bottom of the range here though, so I would be mindful of that. So bearish bias here, but if price does not break the bottom, so this is the same thing we saw for Aussie dollar this week. It did not break the bottom and then turned around, and it could potentially go all the way into 79.80. So that's the downside of the caution, but bias is bearish. If it gets through 77.50, 77 will be the next target, then 76. So for now, bias is bearish, but be careful with the support. New Zealand yen here, this is looking bearish as well, but as we can see, it's right into the support here and has not broken the support yet. So bearish bias, however, if it does not break the support, we could get one of these moves, same thing that we saw in New Zealand US dollar. So price could just go sideways here and retrace this move that we saw last week and go back into 74.50. However, though, bias is bearish, so we need to see a break of this, and then I will look for a continuation into 72.80, and if it keeps on going, we could see it go back into this support here at 72.20. So bearish bias, but be careful of the support. Okay, CAD yen here. CAD yen also looking bearish. We have a bearish pin bar, but as we can see, it is right into that support level. This is where price did push higher previously. So I'd be careful of that, but bias is bearish. And once we see a break of that support, I will look for a move back into the next level at 81.50. So bearish bias for CAD yen as well. Actually, one thing we need to keep in mind in regards to the yen crosses is this will be the comments that we hear from negotiations, the trade negotiations between US and China. So we did hear, so this was another reason we saw yen crosses turn around. Part of that reason was because we heard positive comments from one of the officials who is close to the trade deal, saying that US and China trade deal was moving towards towards some sort of an agreement, and they were in the final stages of reaching an agreement. And we also saw tweets from President Trump saying that they should have an agreement in place by end of May. So all of this is positive for the Wall Street, but it is negative for Japanese yen, which means the yen crosses could turn around. So just like we talked about Brexit and UK, if we hear comments, positive comments in regards to the trade relationship or negotiations that are going on currently, we could see all these yen crosses turn around. So keep that in mind. All right, so let's actually move on to our commodities now. For commodities, we see that US dollar is still trading in this range here. Price went into the support and now it has pushed higher, and we could, this looks like a bullish engulfing on the daily, and on the weekly here, we see that for last 3 weeks, price hasn't really done anything. It's just gone sideways here. So gold is range bound at the moment. So what I would look out for would be a further range bound move. So if you go to daily to take a closer look here, we have a bullish on the daily, which means we could go higher. So I will look for a further move to the upside at 1287, and then basically looking for a range bound move. And that's kind of what I'm expecting. Should things change, we could see a change in this, but for now, looking for a range bound move, looking for price to go up into 1287. And then if it doesn't go through, I will look for this. On the other hand, though, if it does go through, then we have this whole area open for a move to the upside. But for now, I'm looking for a range bound move. So looking for it to go higher into 1287 and just stay in this range. Silver here, silver on the weekly, as we can see, price hasn't really done a whole lot. It was trying to go down, but it hasn't really managed to hold that. So as we can see, price was stuck in this range for a while. It broke that range, and now it's back into this range again. So for silver as well, I will look for a price to go higher. So 1509 is the target here. And if it goes through that, it could go all the way into 1533. But I think it would just stay in the range here for now. It could just be range bound. Unless like Powell comes out and starts talking about interest rate cuts, then this would be positive for silver. And negative for the US dollar. So this one could then go up all the way into 15.33. So right now, though, slight bullish bias, but looking for more of a range bound move than in this, unless, like I said, our CPI data comes out negative and we see that Powell starts talking about interest rate cuts, then US dollar is then toast, and everything can go up against US dollar, including gold and silver. Oil here. Oil is looking a little bearish here. We saw a pin here last time. It did a back test and then dropped. So this is looking bearish here. I will look for price to drop further into 60.20 level here. But looking at the daily chart, actually it still looks bearish here as well. Yeah, so I will look for a move to the downside. It could pull back higher into 62.80 level, but it is bearish at this point. So I will look for a further drop into 60.20 level, which is our next level of support resistance. If it breaks through that, we could see it go into this 50, let's see what level that is. Let's draw our line here, 58.50 level. So right now, bias is bearish for our oil. Next one, copper. Copper did a huge drop, and now it has pulled back into the level that we looked at. And so this is bullish right now. And I think this one could go further into 2.80 level here. And then I will look for this type of a move. So this is something that we see many times. We have a big drop, price pulls back before it continues further, if it does continue further. So right now, I would say slightly bullish here for copper, looking for it to go into 2.83 level, and then we could see a drop from there. So slightly bullish bias here for copper as well. Bitcoin here, looking bullish here. It kind of got stuck here for a period of time, could not break below the support resistance here, and now it's moving higher. Now, the thing here is that we have this inefficient move, big drop here to the downside. So if it holds above 5,600, it could go all the way up into 6180 level. So Bitcoin is looking bullish at the moment. So this is the type of move I would look out for. But if it drops below this level, then we are back into this range again. But right now, though, it is looking bullish, and we could see a pullback either into 5,600 level or into 5,500 level here, and then a further move to the upside. So this is looking bullish. Now, just to mention that these charts have not been updated over the weekend because my broker is closed. So I do encourage you to go look at real-time price on Bitcoin. But based on this here, it is looking bullish. S&P 500, this one got a boost after the comments in regards to the trade relations. So now we see that it is holding right above our resistance level. I was going to say support resistance, but same thing. So it's holding above our resistance level here, which means it could go higher. So I would say target is 3,000 here for S&P 500. It really did get this bullish boost from President Trump's tweets, as well as comments in regards to an agreement being reached. So if we hear further comments, positive comments about that, this is likely to go higher. Target would be 3,000. But if for some reason the talks go sideways, this could drop. But for now, looking quite bullish here. NASDAQ as well, we were seeing a drop last week. Or on Thursday here, we had an indecision candle and then a big bullish move. As a result of our positive comments. Now, as we can see, this is a bullish pin bar pushing right into the resistance. So bias is bullish, and now we are at all-time highs. So my charts don't go much further because we are at, since 2014, it's just been one-way move here. So looking bullish. So I would say 80.50 will be the next target. So bullish bias for NASDAQ as well. So any positive comments are likely to drive the equity markets higher. Japanese yen here. This one is also looking bullish. It, again, came into the support resistance and has bounced off of that. This one does have room to the upside here, though. So looking bullish, we need to see a close above this, this resistance here, though. But for now, bias is bullish. 22720 will be the next target. So this support resistance level. And if the comments keep on staying positive, it could go all the way up there. But this is the next target, 22720. So bullish bias for Nikkei as well. DAX here, DAX is looking bullish as well. And it's been on this bullish move for some time now, for several weeks actually here. So this one bullish as well. Next target here, it does have room to the upside here. Next target is 12600. So bullish bias here for DAX as well. And FTSE is, there we go. FTSE does have a bearish move here for this week, but this one could turn around as well. So if we look at the daily, it did try to push higher. So the way I would approach this one would be to see what happens at the high. So I would like to see what it does at 74.14-ish level. If it stays below that, then it's likely to see, we're likely to see a drop in this one. But if we get, but it could also do something like this and then continue on to the upside here, back into the support resistance. So we have to see. For now though, bias for this one is bearish because of the bearish candle here. And as we can see, DAX on the other hand was quite strong. So all the other indices were quite strong except for FTSE here. It could fall in line with the other ones, but for now, this is looking bearish. Target is 72.90 and then 72.50 level here for FTSE. All right, any questions here? All right, so we'll wrap it up. If you want to download the spreadsheet, well, if you're on my mailing list, you'll get the spreadsheet. If you're not, and if you would like to download it, you can go to tradingwithvenus.com/forecast. Let me just check it out. Yeah, so this is the link that you want to follow, tradingwithvenus.com/forecast. If you're, and it will ask you to just sign, you just click on this button and you can download the forecast that we just went through, all the pairs. You will get that in Excel format and you can download it. So that's the link to follow for that. But that is it for now. You guys have a wonderful rest of the weekend and a great trading week, and I'll see you next week. Bye for now.